G.V. Kenat is a small business owner. He runs a newspaper distribution business. He has about 400 customers with a monthly billing of 300 to 400 rupees each. He has held a savings account at Dena Bank for a long time. Mr. Kenat believes that formal bank finance is out of reach for small businessmen like him. Kenat owns a smartphone. He sends monthly bills and payment requests to many of his customers via WhatsApp. Customers open the image to check the bill amount. They make an instant payment on WhatsApp, leveraging the UPI platform. The payment would immediately reflect in G.V. Kenat's bank account at Dena Bank. Kenat's bank statement would show recurring monthly payments from many of his customers. The following scenario depicts a future for SME finance that is very much in the realm of possibility. Imagine that Kenat now wants to expand his business, for which he requires a loan of 50,000 rupees. He downloads an application from a lender. The app asks for standard information from Mr. Kenat, which he promptly provides. He is then asked for his consent to allow the moneylender to access UIDAI and Credit Bureau to verify his identity and establish his past credit history, respectively. Mr. Kenat provides his consent. This permits the lender to establish his identity through eKYC mechanism. The lender is also able to read some data from customer's phone itself, like SMS information relating to his bank transactions, with his permission. On the other hand, the bureau is pinged electronically, and past credit history of Mr. Kenat is established in an entirely paperless manner within minutes. With this data, the lender makes an offer to Mr. Kenat for a loan of 30,000 rupees, but at a high rate of 19% per annum. However, the lender makes an offer to Mr. Kenat to share more data and improve his eligibility and interest rate for the loan. This additional data can be gleaned from various sources over which Mr. Kenat has complete discretion. He chooses bank statement and identifies his bank. His bank asks for his consent through a one-time password to share his bank statement with the lender. He gives consent to share his statement on a monthly basis. The statement is electronically passed on by his bank to his lender, and within minutes, systems analyze the data and improve the offer to Mr. Kenat. He is now eligible for a loan of 40,000 rupees at a reduced rate of 17%. However, Mr. Kenat still does not find the terms attractive enough and is hoping to get a better deal. For better terms, he can share more data from his utility bills with telephone service provider, MTNL in this case. From GST network, he consents to share his GST filings with the lender. With all the additional data, his eligibility now rises to his desired 50,000 rupees loan at a rate of 16%. This example illustrates a scenario that can dramatically transform access to credit for small businesses in India. Half of what is illustrated is already happening. The remaining half is within our reach. The key proposition is that customers' data stored with various institutions be shared electronically and immediately with the customer's consent with anyone that customer desires. With India Stack technology, this is technically feasible. To make this scenario real, all institutions that hold customer data in any form should be obliged by law to invest in a technology called open APIs so that they can electronically share data upon request instantly.